Hello, folks. This is Raj Sastri from Raj Option Trading. Today, I want to talk about top shorted stocks. Shorting is really, opening a position by borrowing the shares that you don't own. So basically, short seller is hoping stock will crash, and they can, basically make money, so they can return the stock at a lower price. So many people, love shorting because when stock crashes, they can make money. So with that, let's look at some of the heavily shorted stocks. These are the heavily shorted stocks as of March 14th. As you can see here, American Resources, KemPharm, 180 Life, Blink Charging, and the list goes on. We'll look at some of these stocks in a little more detail and see how we can benefit from some of these shorting trends and take it from there. So, this is the list here, 25 stocks. One thing I look for in these charts is really, how is the performance? For example, with first company here, there is a 1 month performance is, negative, and 1 week performance is positive, and 1 year performance is astounding 334. That tells me, it's, little bit, as you see here, 1 month came down. That means some of the short seller may be kind of covering their shorts, and it's 1 week it's going up. There is some activities going on, so people may be buying the shares. So I would not worry too much about these lower price stocks because these will go up and down. Somebody can buy a huge amount. I will pay attention to example Blink as example. Blink Charging, $39 stock, $1.71 billion market cap. And if you look at the insider trading here, 38% insider trading, and insiders are selling the stock. So that sends a negative signal. So you got to be watching out for it. And also, if you look at 1 month performance, it's negative, but now 1 week performance is positive, and year to date performance itself is a huge 2108%. So I would watch out for this type of play where stock has run up so much, insiders are selling, and stock is kind of going up. So I would watch out for these scenarios. I would not buy aggressively, but if you want to buy some put, you could do it, or you could even buy a put spread at a higher price and take it from there. Then stocks like Clovis Oncology, same story here. There is some insider selling, not too much. It's a lower price stock. I wouldn't worry too much about this. And then there is a Koss Corporation, which is a little bit smaller market cap, but huge amount of insider selling. So I would not be buying this stock. I would probably buy some put option or put spread in this scenario. And same story with GOGO. GOGO is a lower price stock here, and 70% of the insiders sold stock. So which means they are taking a benefit of this short squeeze type scenario and selling out. And next one I would want to look at is this one right here. Hepion Pharmaceuticals, $2 stock. I won't worry too much about it. But one thing to notice is really insiders are buying. So which means, even though there is a high short ratio, in this case, float short is 35%, because insiders are buying it, it's a low dollar stock. I'm comfortable, myself buying some, and go along the flow. And next, let's look at one more here, Tanger Outlet Factory. In here, institutions own a huge amount of share, 87%, and short ratio is 31. And they do have good gross margin, and there is a profit margin also. So in this scenario, I would I'm okay. I'm comfortable because there's a lot of institutions are also holding the stock. So I wouldn't worry too much about shorts here. And next, you can look at Root. Root, same story. It's a lot of institutions own this company, so $10 stock. I wouldn't worry too much about it. It may be okay in this scenario. I wouldn't worry too much about shorts. Next is DermTech. DermTech is a $53 company here. And in this case, 1 year performance is 410. I mean, half year performance, 1 year performance is 330. And in here, insiders are buying it. So it's again, a skin cancer play. And, even though stock went up, yeah, I think this company is, sound from a fundamental perspective. They're doing a lot of good work. So in this scenario, I would not worry too much about short sellers. I would think, stock will, probably go up a little bit because of the solid fundamentals. Next is future holding. Here also, a short ratio is 28%, and insiders own 52% here. In here also, this is a good solid company. I would not worry too much about this one too. Next, let's look at a couple more here. Walmart as an example. Walmart insiders sold some of the shares. That's a little bit red flag for me. I would not be buying Walmart at this point. And again, Walmart has got huge institutions own about 30%. So I would not buy at this point, especially because the insiders sold the stock. GameStop is a I think this company has come along long way. One thing I notice here is institutions own 95% of GameStop at this point. So that means this company has got good backing from institutions, especially it's part of the XRT, which is a retail ETF. So I think in here I would not go against the shorts. If you want, you can do a small put spread at a little bit higher price. Maybe say 170, 165 put spread you could buy. But I would not bet against GameStop at this point, especially because there is a lot of institutions buying into GameStop. Next is Smile Direct and Sun Power and even Workhorse for that matter. All these three here. There's a huge insider selling here. I would be a little bit worried. I would not be buying the share at this point. Next is Carvana and Alti. Same story. There is a huge insider selling. I would not buy the stock at this point. I would watch out. So with that, it's a wrap. It's a quick rundown of these short, top shorter stocks and what I would be doing. And what I will also do quickly is I'll look at one share, one stock. Probably for that, let's look at, let's see one of these here. Probably we can look at Koss Corporation. Let me go back to Thinkorswim here. Say bring up Koss, see if there is an option. Koss doesn't have options. Probably let's look at Blink, BLNK. So Blink has options. What we could do is really, if you look at the chart of Blink here, there is 64 is high, now it's 39. So probably I would not do anything here because it came down a little bit. Probably it's okay. Let's leave that alone. And next we could look at um, see let's see 70% here. GOGO very small amount. Let's skip that too. That brings us to Smile Direct, SunPower, Altis. Probably let's look at Carvana. Carvana, there is a huge insider selling. It's a $286 stock, CVNA. It's about a car vending machine. So Carvana, I think it could be a good play here, $323. What I would do in these scenarios, I would go here, option chain, maybe go 159 days out, that's fine. 286 is the stock price. So I would go here to um, say 390, 380. I would buy this spread here. I'm buying 390. So other way around, I'm actually buying 400, selling 390. There you go. So I'm buying 390 here, selling 380. I don't want to do that. I would do a little differently. I would do right here 290, right here. There you go. So I'm buying 300 and selling 290. For that I'm paying $6.48. And if I confirm and send, as the stock falls, I'm making $352. This is one play where you are buying a higher strike price put option, and you are selling a lower price put option. So you're kind of buying this spread for $6.80. You're hoping this spread will cost more as stock falls. This is one idea. You could look at some spread like this, to benefit from such short squeeze scenarios. With that, thank you very much. Happy investing. Bye.